Hey guys, welcome back to the Max Invest YouTube channel. In today's video, we've got Anthony Sassano on the channel, and if you don't know who Anthony is, he's the founder of the Daily Gwei YouTube channel, and he's the founder of ETH Hub. Anthony first got into crypto back in 2013 when he bought Bitcoin. However, he left the markets, later re-entered in 2017, bought Ethereum at roughly $10, and ever since then he's been an independent Ethereum educator, educating on all things Ethereum. And if you're not watching the Daily Gwei, I'd highly suggest that you do. It's my favorite YouTube channel to watch, and I'll leave a link down in the description below for anyone who wants to check that out. Alright, so the first question that I wanted to ask Anthony is about Layer 2's and Ethereum's future. So the first thing I want to ask is what does the next year look like for Layer 2's? Because obviously we've got optimistic rollups getting closer and closer to actually being fully like a Layer 1. zk rollups seem like they're a little bit further away. What are the things you're expecting to see this year from optimistic rollups, zk rollups, and all of that?
Yeah, for sure. Well, first of all, thanks for having me, Max, and thanks for the intro. I really appreciate that, and the shout out of my channel and everything like that. Yeah, I think this is a great question to start with. I think the Layer 2 ecosystem on Ethereum is in the best place it's ever been by far. There has never been a time in Ethereum's history where we've had such certainty around how Ethereum was going to scale, which is ironic because there's so many people who think that Ethereum can't scale still, and they think that the $50 to $100 fees on Layer 1 is like the end state of Ethereum, which is really funny. Because as I said, we're at the best kind of position we've ever been for scaling Ethereum. So the two leading solutions right now are Arbitrum and Optimism, and that's what we refer to as generalized platforms. So they're basically the kind of same as Ethereum Layer 1, where you can build and deploy anything you want to these networks. They're permissionless. There's no whitelist or anything like that. There was, in the earlier stages, but now there isn't. So you or I or anyone can go on there to deploy a smart contract, and it'll kind of live on there, and people will be able to interact with it just like they would on Layer 1. But without the really high fees. So that's why everyone's super excited about these platforms, is because of the fact that we've seen that these generalized blockchains, these generalized smart contract blockchains really do take off really quickly, because of the fact that everything can interoperate with each other. You have that composability, and people just start building really cool things. Now there's a bunch of other solutions out there that are kind of app specific or kind of single ecosystem specific. There is DYDX, which is its own zk rollup, but it's really just DYDX on there, which is a perpetual exchange. They do plan to add more features in the future, but it's just going to be theirs. It's not a generalized platform. It's not a permissionless platform where anyone can build on it. It's DYDX's rollup. Same is true for Immutable X, which is an NFT focused. It's not technically a rollup. It's something called a Validium, which is a hybrid solution. And then you have some others out there as well, like Loop Ring and stuff and things like that too. All of those, as far as I know, are based on the zk side of things. I don't believe there's any app specific optimistic rollups live yet, from what I know. But that's because on the zk side or the zero knowledge side, there's no way to do a generalized zk rollup just yet, especially the EVM compatible ones. So when we talk about EVM compatibility, we mean basically compatible with what Ethereum Layer 1 is. So Ethereum Layer 1 smart contracts are coded in Solidity. They run in what's called the EVM or the Ethereum virtual machine. And that's what Optimism and Arbitrum do as well. They basically mirror what Ethereum Layer 1 can do. Now, there are zk teams working on generalized EVM platforms. zkEVM is an effort that's being undertaken by multiple teams right now. But there's also other efforts such as Starknet from Starkware, where they're not trying to be EVM compatible. They're actually trying to build a new platform with a new language called Cairo and a new engine called StarkX instead of kind of the EVM there. So there is so much, as I said, there is so much happening, and I'm really only just scratching the surface right now of what's happening in the Layer 2 space. But all of this is scaling Ethereum, because it basically, what happens with Layer 2, at least with rollups, is that these rollups have to actually pay Ethereum for its security. So they do what's called, they post their call data to Ethereum Layer 1, and they post the proofs of their transactions to Ethereum Layer 1 as well, so that it's secured there. So if anything ever goes wrong on the Layer 2, you can just kind of withdraw your funds back to Layer 1, and you're all well and good, because it doesn't rely on any kind of validators there. They rely on Ethereum's miners to secure them as well. And once the merge goes through the validators too. So there's so much to the Layer 2 ecosystem, but it's very, very exciting right now.
Yeah. And one of the other points that you brought up, which I found out about a couple of months ago, maybe 5 or 6 months ago, is that layer 2s don't necessarily need to use the EVM. Like you can have a zk rollup on top of Ethereum that's actually coding in a different language, like with Starkware that's using Cairo. And recently I've been looking into like Starkware a lot and the Starkware warp and everything. And yeah, I've been quite bullish on all of the ZK stuff that aren't actually using the EVM and trying out different stuff. Like, what are your thoughts in that regard? Are you more bullish on sort of ZK Sync, who's trying to build a ZK EVM, or maybe Starkware, who's going in a different direction?
I think both have their merits, but in different kind of like timelines. I think the fact that there's so much network effect already built up around the EVM makes it very easy for any EVM compatible chain, whether it be a layer 2 or another layer 1, to quickly gain traction, because the existing apps can just redeploy their existing code to these networks with minimal changes, or with potentially no changes as well, which is good for a few reasons, right? One, it makes it very easy for them to do it. Two, they don't have to do audits again, because audits are very expensive and time consuming. And none of the major apps want to go to mainnet without an audit on any new code that they put to mainnet. So that's kind of like in the short to medium term, we're going to see the EVM stuff dominate. But I think in the longer term, there is definitely room for non-EVM, non-Solidity platforms. And, there's arguments to be made that the EVM and Solidity are actually, from a tech perspective, pretty crappy, right? Pretty inferior. They're old technology. But for anyone who's paid attention to technology over the last 20 years, it doesn't matter. Old technology, whether it's inferior, whether it's not, the best thing ever, when it comes to software, will still accrue network effect. I mean, most of the internet still runs on JavaScript, and many people think JavaScript is a really bad language. So I think the network effect for the EVM and for Solidity is going to persist. I think that's going to be around for a very long time. But I think that these other platforms will also gain traction, but it's going to take them a bit longer, because people have to obviously rewrite their apps or write new apps. They have to obviously get the audits and things like that. There are tools to kind of like transpile code from Solidity to Cairo. You mentioned Warp, but those are still very new. I don't think any team's going to trust the straight compiled code without reviewing it themselves and auditing it themselves, because there could be bugs and things like that. And obviously, if you're an Aave or if you're a kind of a Curve, you don't want to deploy your app to a new chain with modified code, and then something happens, like there's an exploit or something, because it will affect all of your kind of like value, especially your token value, because of that kind of like exploit. And obviously, your users will get hurt as well. So I do think there's room for both. I just think that the EVM is going to be dominant for the foreseeable future, because of the existing network effects, and also because of the fact that it's just super easy to develop for. It has so much tooling around it. So many developers already know Solidity, and it just entrenches itself even further. It's not like adoption of the EVM and Solidity are going backwards. There's still people learning Solidity, building on the EVM. So that's kind of like what happens, right? That's how network effects become really, really dominant. It just compounds and compounds and compounds, and eventually, it just reaches critical mass, and then there's nothing that can stop it.
Yeah, and I definitely agree with like the network effect thing, because even in the alternative layer ones, like a lot of the big ones, with Solana being an exception, but like Avalanche is using the EVM, so is Phantom, and a whole bunch of the other layer ones are. So yeah, I definitely think it's probably the best for developers to go on. And then the next thing that I kind of think about with layer 2s is I like to compare them to layer 1s, to actually see where they are right now. And most of my activity is probably on Arbitrum, maybe half Arbitrum and Polygon right now. But I kind of think that, like, Arbitrum's good. It has heaps of applications on it, but it still feels like it's kind of missing something that a normal layer 1 would have. And obviously that's, there's not quite a token yet, which adds a bit of excitement when you're using a chain. There's still a centralized sequencer and a few different bits and pieces that I feel like aren't quite making it compete with layer 1s just yet, so it's not taking away that market share. So yeah, I guess my question is, like, when do you think Arbitrum will be at a stage where it's actually ready to compete with alternative L1s and all of the other optimistic rollups as well?
Yeah, I mean, I think it's kind of like a pretty big question. I think today the L2s are on par with these alternative L1s in terms of, I guess, like, user experience and usability. But obviously their fees for anyone who's used them are more expensive because they inherit Ethereum security. They will get cheaper over time, but a swap on an optimistic rollup is still a few dollars, whereas on a potential L1 it could be 10 cents or less because they're much more centralized, and they've kind of like taken trade-offs as well. And it's a different kind of like thing as well, because on the L1s they are a different construction. They're what's called monolithic chains, and for anyone who's kind of like been following this, there's the monolithic architecture, then the modular architecture. But I guess, like, without going too much onto a tangent here, coming back to, I guess, what you were talking about with regards to stuff like tokens as well, right? Like, tokens are a really great coordination mechanism, and pretty much all of the L2s today do not have a token, right? At least the generalized ones don't, except I think Polygon Matic, the Matic token would be an exception here. They have their Polygon POS chain, which isn't actually technically an L2, but they do have other L2s like Polygon Maiden. I mentioned Nightfall before, Zero, and oh man, I've gone blank on the last one, but they have like 4 different L2 teams right now. And the Matic token is going to be kind of like at the center of that, from what I know. But Optimism, Arbitrum, ZK Sync, Starkware, and some of the other teams don't have a token yet, right? The generalized platform. So there's nothing for people to kind of like speculate on. They can go use these networks and speculate on the app tokens on these networks, but they can't actually speculate on the network token just yet. You can buy ETH, of course, because ETH benefits from the L2s, but that's a bit different, right? Like, I think people view ETH as kind of like a nice, store of value for the longer term, and it already has like a pretty large market cap. And then they kind of look at the L2s and like, okay, well, I want to buy into this. Like, how do I get direct exposure to the growth of these things? And I think that the tokens will come eventually. There's some teams that have already confirmed tokens, like ZK Sync has said, yes, we're going to have a token. The Starkware, Arbitrum, and Optimism, they're playing coy, but everyone knows they're going to have a token eventually, right? Like, it's pretty much one of my golden rules is that everything's going to have a token eventually. But when that happens, I think we're going to see a pretty cool, I guess, like, narrative shift where people will go from, oh, Ethereum can't scale, to, wow, Ethereum scaling by these layer 2s. Because as soon as you buy into something, as soon as you kind of like invest your money, it changes your mindset. You want to learn all you can about it. You want to be positive about the thing that you just bought. You don't want to kind of like be negative about it because that's bad for your investment, right? And it makes you kind of like do things, and it motivates you to do things that you wouldn't do before, like onboard onto these things, experience it for yourself. Funny enough, there's a lot of people who will talk about something and FUD something without actually using it themselves. So people say, oh, these L2s, they don't work very well, they're too expensive. There's a lot of them who actually didn't use it. They're just repeating what they've heard from other people. But if they've got an incentive to use it, like a token or some liquidity mining or something like that, then they're more likely to use it, and they'll actually experience it and be like, oh, okay, maybe I was wrong, right? They probably won't admit they were wrong, but they'll think to themselves, oh, I was wrong. This is actually a really good experience. This is awesome. So I think that the token will play like a big part there. But at the same time, the teams have to be careful as well, because tokens can be good and bad. Like, there are a lot of tokens that are bad because they start really high in kind of like market cap when they launch, really high in price, and then because of that, they're just down only from that point on. And there's been a few tokens like that have come out. Like DYDX is a prime example. It started off really high, and I think it's down like 70-80% now from its all-time high. And I mean, I'm not meaning to pick on DYDX, but that's like an L2, I guess, technically, right? Because they're an app-specific L2. So I think a token double-edged sword, if done right, can be very beneficial, but teams have to be careful when doing it as well.
Yeah, I feel like an L2 team, when they're making a token as well, it needs to be more than just, say, governance. Like, I'd like to see, an L2 token that, sort of gives people access to maybe fee revenue or from sequences and validators, or control over sequences and validators, or something along those lines, which I think would give it a bit more value. But yeah, I think, hopefully in the next few years, when tokens start coming out, Arbitrum, Optimism, they'll be able to do liquidity mining, incentives programs. We'll be able to see a lot more retail investors get on board, and they'll actually be able to start having the Ethereum experience with lower fees. So I'm definitely very bullish on that. And then one other thing that I was thinking is, would you think that in the next couple of years, these layer 2s are actually going to start taking away market share from alternative layer 1s? Or would you be like more on par with maybe the the pie just growing and alternative layer ones continuing to get bigger along with layer twos?
I think generally the pie is just going to keep growing. I think block space demand as a general thing is infinite. Like, doesn't matter if it's Ethereum or a layer one or a layer two or a side chain or another layer one. There's always going to be demand for blocks, and that's what blockchains sell. They sell blocks. That's their product. And in those blocks is a bunch of transactions. The blockchain doesn't actually care what the transactions are. There's DeFi, NFTs, DAOs, it's all sorts of things, right? So I think the pie is just going to keep getting bigger from here. But there are limits to these L1s. There's limits to the L2s, but I think for these alternative L1s, because of the way they're architected, where essentially the way a layer one blockchain works is that every node in the network has to kind of like relay the block or replay or kind of like I guess, what's the word I'm looking for? Kind of like stay up to date with the tip of the chain, essentially. So, and that's incredibly inefficient. That's why blockchains, at least the layer one blockchain, when they have to deal with kind of like consensus and things like that, are very, very slow, very inefficient. And to get more efficiency out of layer one, essentially what you have to do is you have to centralize. You have to basically do what Solana's done, which is create like a very small set of validators that are in kind of like data centers and have like beefy hardware, and they can run, more transactions, but they've basically centralized everything. And the same is true for a lot of these L1s as well. They just kind of like cranked up the hardware requirements. Whereas the kind of like the way the L2s work is that they rely on an L1, such as Ethereum L1, to replay all the transactions like it normally does, or kind of like validate all the transactions like it normally does across its whole network of full nodes and miners and all that sort of stuff. But the L2 itself doesn't have to do that. It only has to have one honest kind of like validator and sequencer online, and then that can just post it to L1 and it doesn't have to worry about anything else. So from that perspective, the L2s and the modular architecture is inherently more scalable than any L1. Even if the L1 is literally kind of just like one server, or kind of like maybe a handful of them. If it's just one server, it's kind of like, it's really not a blockchain then. But like, let's say there's only 5 kind of like validators in the network. Those 5 still have to talk to each other, right? Still have to validate all the transactions together. But an L2 is inherently more scalable than that because of the fact that it doesn't have that consensus overhead, doesn't have to validate all the transactions and things like that because it's using Ethereum or using another layer one. So I think that as the pie gets bigger, these things will get more use, but it's going to be about what breaks, right? What falls apart, what actually can't handle the load. And we've seen already that Solana hasn't been able to handle the load because of the fact that it has, it doesn't really have a fee market. It has, all these scalability, but that means just bots come along and just span the network, right? Span the network with transactions. It's not a new thing. It's called a DOS attack, a denial of service attack. You can have like a direct attack that's done on purpose or an accidental one where maybe you have too many people flooding the website. I mean, if you've ever been on a website when there's been like a popular launch happening, you'll know that the website can sometimes just die and go offline. It's because there's too many people hitting it at once. That's like an accidental DOS, but there's actual kind of like DOS attacks that happen that are purposeful where people just have like a botnet of devices. They flood the website with traffic and the website falls over because the server that's hosting it can't handle that traffic. And that's what's happening with Solana, where there's just so many bots on the network whenever there's like a hype launch or something, and the network falls over because it can't keep up. Whereas on an L2, you could have like the beefiest kind of, like sequencer ever. And that kind of like wouldn't matter from that perspective because that could handle all the transactions and then just push that to L1. It wouldn't need to kind of replay it all like an L1 does. It relies on the L1. So I think that while the L2s can still be DOSed and everything like that, I think we're going to see much less of that than we will on the L1s. I think they're going to handle the load a lot better than the L1s. But as I said, like the pie just generally is going to grow like so much bigger from here. I don't think people realize just how big it's going to get from here. Still, people think that the demand we have today is, a lot. It's not. I mean, if you look at the aggregate real transactions per second, and I say real transactions per second because I mean the ones that actually get processed, because there's the theoretical transactions per second that people say, we can do like 10,000 TPS, but you're not actually doing 10,000 TPS. So the aggregate real TPS across all chains, I think at most might be a few thousands. I don't even think it's at that. we expect in the future it to be millions, tens of millions of transactions per second across all of these blockchains. So that growth is literally like 1,000x, right? Like, and potentially more than that, like 10,000x. So I think people severely underestimate how bigger the pie is going to get, and people are just too busy fighting over the pie that we already have when we should be just focused on growing it and growing it for everyone and making sure that we onboard, so many more people. I mean, even the most popular use cases, NFTs, as far as I've seen, have only had like a few million, maybe, people who have ever bought NFT. And that's not even just people, it's addresses, which obviously people can have multiple addresses. I mean, for instance, I've bought NFTs on plenty of different addresses, not just one. So I think from that perspective, even the most popular use case being NFTs right now is not even touching like 1%, not even near 1% of the population. So, and I think, and that's just counting humans. What about robots? Robots are going to be dominant on this network. Bots are already dominant, and they're just going to keep increasing as well. So I think, as I said, my overall opinion is that the pie is just going to get, stupidly bigger from here. And we should focus on that. And we should focus on building chains, whether they be L1s or L2s, that can handle the load. Because if you can't handle the load, then people are going to go elsewhere.
Yeah, I definitely agree. And I've tried to look into like total real transactions per second before. And the majority of the chains that advertise high TPS, like, they're counting consensus votes, and they do heaps. If you counted Ethereum's consensus votes on the Beacon chain, we'd be doing 750 transactions per second. So yeah, there's definitely a bit of a disconnect there, and there's still a lot of room to grow with the amount of transactions we can do. Next thing that I wanted to talk about is Vitalik had sort of a multi-chain thesis where he essentially said that he believes that the future of blockchains is going to be multi-chain. We're going to have Ethereum and a bunch of separate chains that essentially won't really interact with each other, because if you have cross-chain applications, well, then there can be, a lot of security risks when you're using multiple different chains for one smart contract. However, I sort of, disagree with this a little bit, because I tend to think that the future's more or less going to be Ethereum layer 1 settling every transaction, a bunch of layer 2s on top of Ethereum, and then basically cross-chain or cross-layer 2 applications between these. And I do think, from a perspective like the current layer 2s, it seems like there's a bit of fragmented liquidity and whatnot, and I think there are some solutions like Chainlink's CCIP that could actually help this out on, layer 2s as well. What are your thoughts there?
Yeah, I mean, I think the thing is about, I guess, cross-chain, multi-chain, all that sort of stuff, is that the bridges and kind of like the construction of the bridges is very important. And we're still very early in these kind of like days. And the thing is, these bridges are massive honeypots as well for attackers. So they tend to hold a lot of value in them, billions of dollars, and attackers will see that. And that will be a nice little kind of like thing for them to exploit, right? So I think Vitalik's point was that he doesn't believe that they can ever be, as secure as we need them to be. And I would argue that, we don't know for sure yet, but I would say it's probably highly likely that we're not going to get to a point where these cross-chain bridges are as secure as we want them to be. But maybe that doesn't matter. Maybe people are comfortable with that risk. It's all about what people are comfortable doing and what application developers are comfortable doing and things like that. So even if it is less secure than a L2 on Ethereum, for example, where there are bridges, but those bridges are validated by the parent network, by the layer 1 network. Whereas if you have a cross-chain bridge that has its own validator set, then you're relying on that, and then you're relying on the other chain security as well. Things get really messy, especially as things begin to interoperate. Because I mean, there was just today actually, there was the Solana wormhole bridge that was kind of it was kind of hacked and drained of $250 million worth of ETH. Now, what ended up happening was that all the ETH on Solana that was actually in the wormhole contract was worthless, because there was no ETH backing up that ETH on Solana, because the one on Solana was just an IOU. When you bridge across to another L1, you get an IOU that basically says, well, you've locked assets in this bridge contract. The only way you can get them back is if you bring back the IOU, essentially the IOU token that you've been issued on the other network. And if that ETH in that contract that you locked it in is gone, while your IOU is worthless because there's nothing to claim. There's nothing to claim back. So, and this has on-flow effects where what happens with all of the ETH, all of the kind of like ETH on Solana that was in AMMs or in lending protocols. If it's worth zero, then the chaos can ensue because people can trade in other assets for it. They can basically make a lot of money doing this. People get liquidated, all these sorts of stuff. Now, in Wormhole's case, I think a bunch of people, I think FTX or Jump Capital or some kind of like big money players said that they're going to backstop it. They're going to just reimburse everyone. They're going to put the $250 million worth of ETH back in, which is a pretty big deal because they have, that's basically them saying, well, we have all this money that we're literally just going to use to save this thing, because if we don't, I mean, they knew the consequence. If they didn't do this, a lot of things would break. So I think when you're looking at worst case scenarios like that, and it's going to get worse than that. There's going to be billion-dollar hacks of these bridges eventually because there's so much value going to be locked in them. But when you look at that sort of stuff, there's not always going to be someone there to backstop it. Like there are going to be plenty of hacks that happen, and there's going to be no one there to backstop the value. So things are literally going to go to zero. The IOU is going to go to zero, and then you're going to have chaos on the chain. People are going to lose lots of money, and it has what's called contagion, where not people that weren't even kind of like holding onto that say that ETH on Solana were affected by it. There could be other users that were kind of like in the lending protocols, in the AMMs, and it's all this kind of like cross stuff that happens. And that's where it gets scary, is where you can be affected by these sorts of things without even being a part of the hack. So I think that's kind of like Vitalik's overall point there, is that all this interoperation between, cross chains, having different validator sets, validating this, validating that, validating the bridges, it's a lot of complexity, it's a lot of security risk, and it's a massive honeypot for attackers because there's so much money that's going to be locked in these things. Whereas if you just have a multi-chain thing where you have like Ethereum and its L2s, all of the L2s are verified by Ethereum. Their bridge contracts are verified by Ethereum, after the merge by its validators. So you're only relying on one validator set. You're not relying on a validator set for the bridges. You're not relying on a validator set for the L2s. So it actually becomes much more secure and much easier to reason about, because even if you have interoperability between the L2s, if they're going through L1, they're still validated by the L1 kind of like network and security. So much easier to reason about, much more secure. And I think that's what Vitalik was basically trying to get his point across. But in saying that, I did want to note that the Solana wormhole hack that happened today was a smart contract bug. It had nothing to do with what Vitalik was talking about. So some people thought it did, but no. I mean, a smart contract bug can happen to anything. It doesn't matter if it's a bridge or a DeFi contract. It's, there's always going to be bugs in these sorts of things. But and it can happen to an L2 bridge as well. But Vitalik's post was more about the security of the bridges themselves and the validators and the cross interoperability between it, as I just explained.
Yeah, and I think right now crypto's sort of in a bit of an inefficient state in a way, because what you have is heaps of layer ones starting to spin up, and I kind of consider it wasting money on consensus, because they seem to be, paying out a lot of money for consensus that's nowhere near as good as Ethereum's, when they could just compute the transactions and then just inherit the consensus for a significantly cheaper amount, and the consensus would be quite a bit better. So I kind of think that as well, in the future, we're probably not going to see all of these completely separate chains standing on their own and then just a bunch of sort of tenuous bridges that are connecting them. I kind of think that my long-term thesis is that most of the layer ones will eventually turn into layer twos. Do you sort of share that, or do you think people like Emin and Anatoly are probably just never going to do that for other reasons?
I don't think they're going to do that for social reasons. What I do think is going to happen is that we're going to stop seeing L1s pop up and we're going to start seeing L2s pop up, because for the reasons you outlined. Now, the reason why I think it hadn't happened in the past is because L2s weren't at the place where they are now, right? They've only it's only been 6 months since these kind of like L2s have been live and available for people to use and to fork as well. So I think we're going to just see a lot more L2s spin up. As I said, they're going to be inherently more scalable than these other L1s. But most of the L1s, I don't believe will become L2s. A lot of them will fail, I think. Especially the ones that bring absolutely nothing new to the table, where they're literally just EVM clones with kind of like a bigger block size, essentially. I think they're going to go by the wayside. But for social reasons, there's no way Solana, Avalanche, even I think Terra, I don't think there's any way they're going to pivot to being an L2. I mean, Solana and Avalanche pretty clearly want to be Ethereum killers. So for them to become an L2 would be admitting that they're not an Ethereum killer and their narratives go away. And then their token price actually might go down because of that. Because people will be like, well, why do I need these tokens? I'll just own kind of like ETH as kind of like my bet there. But there's a plenty of other ones out there that will just either fail or, just continue on as zombie chains. But I mean, there's a lot from the 2017 era that zombie chains today. I mean, like Neo, for example, that was a huge thing in 2017. No one really uses that at all, talks about it. EOS, I mean, Solana is usually sometimes referred to as EOS 2.0. We'll see what happens there. I don't think so. I think Solana has as much as I don't agree with Solana's architecture or its design, it has a lot of money behind it, a lot of people behind it, a lot of backing. So I think that it'll persist for a while. Same with kind of like Avalanche, but a lot of these other ones, they're just not going to be able to get the mind share, and they're inherently going to be just less scalable, less exciting for developers than the L2. So I can't wait to see how many L2s blossom over the coming years. I think there's going to be plenty of them, but not all of them will succeed either. The block-space demand is infinite, but it kind of like depends which networks can service that demand reliably. Because as I said, there's a difference between theoretical TPS where you market your TPS as 10,000 and then in reality you can only do like 100. At that point it's kind of like, well, I mean, why would someone use your platform instead of someone else's that can actually do what they advertise?
Yeah, I think that makes sense. And then, the next thing I also wanted to do is take a little bit of a shift away from layer 2s now. And I wanted to talk about something a bit more controversial, where a lot of people say like Ethereum is ultrasound money and ETH is money. And I think Ethereum is money in the sense that it's a great store of value, a good investor's token. And I think it's a better store of value than, say, Bitcoin is. However, I'm sort of unconvinced on ETH as a medium of exchange over the long term, because I see ETH is definitely being used today on OpenSea by a lot of people as it's most convenient. But I think that in the long term, a lot of stuff is going to be abstracted away from blockchains and the end user is going to get a real simple interface. Like I think one day someone will go online, they'll buy something off Amazon for $10 and that will eventually be settled down to Ethereum without them even actually knowing that. So I'm not 100% convinced on Ethereum as a medium of exchange over the long term. Like, what are your thoughts on that?
Yeah, I mean, when talking about medium of exchange, you have to kind of look at the fiat system and what it's competing with, right? Like ETH as a medium of exchange is competing with stable currencies or relatively stable currencies like the US dollar or the Australian dollar or the euro. But the thing is, stability is actually something pretty funny to think about, because when you kind of say, oh, $1 is worth $1 and it's stable and it's not worth less than that. Well, I mean, it depends what you're comparing it to. If you're comparing the US dollar to ETH, for example, it's lost a lot of value to ETH, right? Like that's the different mental model that you have to think about. If you're looking at the US dollar compared to purchasing power, well, $1 goes a lot went a lot further 2 years ago than it does today because of all the inflation that happened. So I think when you look at stability and medium of exchange, unit of account, you have to kind of like do that relative to your purchasing power, like what you're actually buying and what if everything else has gone up or down. Because if I wanted to buy ETH today, it costs me $2,700. If I wanted to buy ETH 5 years ago, it would have cost me like $1, right? So when you think of it like that, you can see that the USD has lost its purchasing power against ETH by a lot, but it may gain it elsewhere. And when people kind of like talk about stability, it's kind of like, okay, what are you buying with that? There's a reason why people don't like holding cash, especially when interest rates are low, because they know that it's getting inflated away. So their purchasing power is going down. I mean, a lot of people's bills have basically doubled in the last year. Like there are utility bills because of, not just because of inflation, but because of the COVID stuff as well. But that just means that, is your USD really stable, right? I mean, it depends what you're comparing it to. I think when you look at ETH, it's obviously very volatile compared to something like the US dollar, but to itself, it's not. To itself, it's 1 ETH equals 1 ETH. To its own economy, like the NFT economy, if everything is priced in ETH, well, then NFTs move with ETH. And you've actually seen recently ETH halved, but NFTs kept going up in ETH, right? Like because people trade mentally, they look at the ETH value. They don't actually look at the USD value because they're like, okay, well, if I bought this for 1 ETH and I can get 3 ETH, then I have 2 ETH profit. It's not, oh, I bought this for X amount of dollars. Now it's worth this X amount of dollars. Because if you're buying something with ETH, you want a return profitable against ETH. You don't really care about the USD kind of like value there. So I think that from the people I've spoken to in the NFT ecosystem where this is prevalent, that's their mental model. So that's how I think about stability, units of account, and things like that. And it kind of like depends on the asset. Like ETH is more volatile than the US dollar, of course, obviously, but it's also more volatile to the upside. Like by investing in ETH over the long term, you've done a lot better than just sitting in US dollars. Like if you sat in US dollars for the last 5 years, even in a bank account, you're earning some interest, you have basically nothing. Like if you had $1,000 in a bank account over the last 5 years, you may have made, I don't know, $100 in interest, maybe. And that's like a really high interest account. I don't think you even would have made that. Whereas if you put $1,000 into ETH 5 years ago, I mean, depending when you bought in, you'd probably be a millionaire today. So that's how I kind of think of it. Your purchasing power is what you should be looking at, not the actual currency that you're using. And if you're denominating in ETH, well, then you're just looking at your purchasing power in ETH. Like what NFTs can I get for 10 ETH today? What NFTs can I get for 1 ETH? And like that's kind of like how I think about it in my mental model around it.
Yeah, I agree. I definitely have started like denominating my entire portfolio in ETH and just like thinking what's outperforming ETH. And of course, most of the time, not that much is outperforming ETH. So I just start putting more and more into ETH over time. But yeah, one of the other things with like using ETH as a unit of account and denominating with it is when you go to pay your taxes, say, and you've gone from 1 ETH to 5 ETH on an NFT, you're not like paying, you're not really paying 4 ETH in taxes. You've sort of got to go back to look at the US dollar or the Australian dollar amount. And a lot of that kind of makes me think that over the long term, it'll probably be a bit more convenient for people to kind of start using dollars, if you know what I mean.
Yeah, I think the taxes thing is really the only thing that throws a wedge into everything I was talking about, because you're right. When you're in Australia, you dominate your taxes in AUD, which is super annoying. Like if you're in the United States, you dominate your taxes in USD. So that does change it. But I actually think, funny enough, in the NFT ecosystem, there's a lot of people who don't actually realize they have to pay taxes on their ETH, and when they trade ETH as another asset, I think people actually view ETH as literal money because it's called cryptocurrency. Like a lot of new people have no idea that ETH is actually not supposed to be a currency, right? It's supposed to be a store of value, trustless collateral asset, staked asset, bond. I mean, it's not really a currency. So I think people don't realize that, and that's why a lot of it's been so prevalent, is that people just they will over time, because they'll be like, oh crap, I owe taxes on this, I have to work out the taxes in the fiat amount. But it's been wild to see, like, if you're not thinking about that, if you're just kind of like using it as money, you can actually have an entire economy based on another asset that's not a fiat asset, that's not quote unquote stable, and you can actually see how the economy works within that as well. But I definitely think the taxes thing is gonna put a nail in stuff. But there might be governments around the world that denominate their taxes in ETH maybe one day. Who knows, right? There are smaller nations out there that might do it to attract entrepreneurs and attract people to their country. So we'll have to see how that plays out as well, I think.
Yeah, that'd be pretty cool if the government allowed you to like denominate taxes in ETH and pay taxes in ETH, and maybe one day, but I still don't think we're going to be getting there in the next 5, even 10 years. It'll probably take a while for our governments to do it. And then the next thing that I also wanted to discuss a little bit is recently, obviously, the crypto markets have dropped a fair bit, so it's a lot of volatility. And yeah, I just sort of wanted to discuss how you'd invest in Ethereum and what's its value proposition, because I get a lot of people, they're talking to me and they just can't understand the value of ETH, and I'm trying to explain it in the best way possible, because you've got Ethereum going up and I'm telling people it's a consensus token, it's used for fee revenue, it's used for staking, trustless collateral, all of these very traditional points, but then they're kind of like, well, why did Dogecoin go up this amount, Solana go up this amount? Like Solana's earning $10,000 in fee revenue a year and going crazy. Ethereum's earning $10 billion in fee revenue a year and it's, appreciating at a slightly slower rate. Like, how do you sort of view investing? Do you see it from the more meme and, degen side, or the more sort of, traditional side, I suppose?
I mean, there's a lot that goes into it. I think for me, I always take the long-term view. I think people don't understand market caps as well, especially newer people. Something with a $100 million market cap is obviously, if it has a lot of demand, is going to go up in value more than ETH, because ETH has a $300 billion market cap. That's just the laws of market cap and liquidity and everything like that. It requires more money to move ETH's price than it does some other token that's worth maybe 100 million market cap or something like that. So that's kind of like a big rule of thumb. But at the end of the day, it all just comes back to supply and demand. If there is not enough supply and too much demand, the price goes up. This is the golden rule for absolutely everything in life. No matter what it is, doesn't matter if it's a crypto asset or a stock or a bond or a physical good. If there is less of it and there's more demand than can be met, prices go up. Simple as that. This is, and in crypto, within assets, ETH has a lot of demand for it, right? But it also has a supply side. It has the supply side where we mint new ETH every block to pay miners to validate the network, to secure the network. Same is true for post-merge or in proof of stake, we'll be paying validators. That's the supply side. The demand side, and also obviously people selling their ETH that maybe they held it for a while and they wanted to sell. That's all new ETH kind of like entering the market there. Then there's the demand side, which is use ETH to pay fees, right? Like, and that most of that ETH gets burned. So that is an obviously massive demand sink. As you mentioned, ETH does a lot of fee revenue. It's tens of millions of dollars a day. That's tens of millions of dollars of ETH being burned a day. ETH's demand for use as collateral within DeFi. So to actually use it as an asset, whether that's being kind of like in a liquidity position or borrowing against it. ETH's use in staking. So in proof of stake, you obviously, instead of using mining equipment, you use, it's still software involved, but instead of BFU mining equipment, you use your actual ETH, you stake it, you get a reward for doing so, you put your ETH on the line, essentially, you lock it up. Right. So it's 32 ETH per validator there. There's 9 million ETH or something staked right now, which is like 7 or 8% of the supply locked up right now. You have ETH's natural demand as a store of value. So people maybe just want to hold it. They just want to say, okay, well, I don't want to hold the fiat. I want to hold ETH because I believe ETH's going to go up over time for the reasons I just outlined, and they hold it at that. So there's a lot of demand. But the thing is that the way the markets work in the short to medium term is that there are phases of accumulation and redistribution. So what ends up happening during sideways periods, you have an accumulation and redistribution phase where you have a lot of people kind of like selling, right? You have a lot of demand, a lot of supply coming to the market, and you don't have a lot of demand, right? You have a lot of people that are buying for the future, but you don't have that rush of new kind of like retail investors flooding in with all their money to buy this thing up really quickly. That's why we have bull bear markets and sideways markets and all this sort of stuff. Whereas when there is that rush, when the accumulation phase is kind of like done, where the redistribution phase is kind of done, and there's not enough sellers left and there's growing demand, it can quickly go up from there, right? We've seen this play out plenty of times where it starts off and then boom, it goes up really, really quickly because there's just like a flood of demand that comes in. Then it comes down really quickly because there's a flood of supply that comes in, people taking profits, right? People are going to take profits. It's just the law of it. And that's why it's so volatile. So I think over the long term, ETH has been a phenomenal investment, right? Yes, it's not at all-time high right now, but ETH has not been over, has not been $2,700 for most of its life. Most of its life was spent at like $100 or something, between $100 and $300 during 2018 and 2019 and stuff like that, and even 2020. And it's only been higher than $2,700 for a few weeks, really, if you kind of like look at the charts. So I think when taking all that into account, when we do have another flood of demand coming in to ETH, there's just not going to be much ETH around for people to buy because the supply side is really not much. As I said, we're burning so much ETH from fee revenue. I think we're burning, we're at a net reduction of 70% of the new issuance. So all the new ETH being issued is being offset by the burn, which is 70% offset. So we've essentially cut issuance by 70%. And then that issuance is actually getting cut by another 80 to 90% come the merge in potentially June. So really the supply side is going to dry up massively. And you're still going to have that natural demand. And then any extra demand that comes in, I believe, is going to push the price up very quickly. It's just that during these periods of sideways accumulation action, there's actually a lot of people who don't want the price to move too fast because they're trying to buy up, right? There's a lot of whales. They like to buy up. Maybe they took profits higher and they're like, okay, I need to get a position again. So there's a lot of that goes on. So that's why I always take the long-term approach. It's much easier. It's much more, it keeps you much saner. It's doesn't, you have less stress, but there is a danger there where not everything outperforms over the long term. There's a lot of projects that are just crappy projects that doesn't matter how long you look at, they've just failed and they're never going back to their previous all-time highs. And you're better off just selling and reinvesting into something else. But with ETH, when it comes to ETH, for me, all I've seen with ETH is that like all the metrics keep going up and to the right. There's so much going on in the ecosystem. There's I just see so much more demand coming in the future. I'm making that big bet that I'm going to keep buying ETH because I believe that there's going to be so much more people buying it in the future. I need to get in now because my long-term price targets for ETH, like I don't give investment advice, but I give long-term price targets. It's like 100K plus is my long-term price target for ETH, like 5-10 years sort of thing. And given that ETH is only 2,700 today, that's a pretty good return over the next, 5 to 10 years. So that's how I think about it. I mean, I could talk about ETH as an asset all day, every day for a long time, and how much kind of like how good it is as an asset, and all the reasons why it should be worth a lot more than what it even is today. I think if you did like a fair value on ETH today, based on its fee, I think just its fee revenue alone, it should be worth $12,000 or $13,000 just based on that. So already today, just based on current kind of like just fair value. These are kind of like measurements that are used in the traditional finance ecosystem for traditional companies. It should be worth that. So I just look at all of that and I'm like, I'm comfy holding ETH. Doesn't matter if it halved in a few weeks. I don't care. Like over the long term, I believe ETH's going to go like much higher than what it is today.
Yeah, I definitely agree. Because, yeah, if you look at like a price to earnings ratio of ETH and you take into account that it's essentially the same as a company buying back stock with EIP 1559 when it's burning, I definitely think Ethereum's, relatively undervalued right now. But in the markets, I've also kind of like completely avoided giving price predictions or price analysis because I feel like in the short term, everyone's wrong. Like you can get two analysts, like one saying one thing, the other saying the other, like the complete opposite, and then both of them somehow end up being completely wrong. So yeah, in the
Yeah, the short term is what I like to call a random walk, where you can walk in a kind of like straight line, right? But the thing is that the market doesn't do that. The market walks like this, right? Left, right, and you never know which direction it's going to go. It can go left, it can go right, it can go slightly left, slightly right, hard left, hard. It doesn't matter. Like it doesn't walk in a straight line. So in the short term, there's no use. And then you see this play out on the charts as well. The charts over the short term is this, right? The charts over the long term for the good assets is this. Just a nice straight line up for most of the assets. And you can barely even see that, depending on what chart you're looking at. So that's kind of like how I view it. And I totally agree. Like the analysts in the short to medium term, I mean, if you have like 100 analysts pointing out something, well, just by law of large numbers, there's going to be some of those analysts that were quote unquote right, but it could have just been a random guess, right? They just as easy, the other ones could have been right. But I do think that's why the short term is so volatile, because everyone's trying to be right and no one really knows. But the long term is based on the fundamental value and the fundamental demand. And that's exactly why I always take the long term view. I never give short term or medium term predictions or targets, always long term. And I only do it for ETH. I don't talk about any other assets because really I only have this strong conviction on ETH at the end of the day.
Yeah, totally. And yeah, my way of dealing with it is just every time I get paid on Monday buying ETH, doesn't matter the price, who cares, just keep chucking into ETH. And yeah, I assume yours is similar with just like daily ETH buys and whatnot. And also another good coping strategy from you is the troll bear market posts on Twitter, which I like quite a bit. Strong support at zero and stuff.
Yeah, I think bear market memes are more fun than bull market memes. I just like them. They're much more creative, that's for sure.
Yeah, a lot of the normies get like trolled a little bit with their assets going down, and they're just seeing like, oh, at least there's strong support at zero. And then
yeah, exactly. Yeah, I think sometimes they don't know that I'm joking. So
I've seen a few people, a couple of Aarons go into the Discord channel, just like typing stuff. They're like, what is Mr. Sassano saying when he's saying ETH is going below zero and Cardano's going to negative 1,000? But yeah. The last question I had, just to finish off is about where you see Ethereum in 20 or so years. Just like, what's going to be happening? Will we still be going on chain using these applications? Will everything be abstracted away? Will some people be doing some stuff, others doing other stuff, and all that?
I think in 20 years, everything should be abstracted away. 20 years is a very long time in tech. I think we could even get there sooner than that. But yeah, in 20 years, everything will be abstracted away. I think Ethereum will be the world's global settlement layer for all finance activities. I think it's going to be everywhere. It'll be ubiquitous across both the finance system, the Web3, all that sort of stuff. I think all of the use cases like DeFi, NFTs, DAOs, they're going to be so prevalent. They're not going to be alien anymore. People are going to, just join a DAO. That's just what you do, right? I think there's just going to be so much of that stuff going on. Everyone's going to live at layer 2's. Then no one's going to live at layer 1 anymore. Even in the next few years, I don't think anyone's going to really live at layer 1. But yeah, I mean, the answer is I think Ethereum is just going to be everywhere. It's going to be like the internet, where we don't even think about it. We don't think about the internet as a protocol. We just think about the apps that are on top and the value we get out of it. And it's just everywhere. You connect to Wi-Fi, there you go. You got the access to the same apps overseas than you do it at home. I think the same thing is going to be true for Ethereum. You just connect to, you can already do that, but it's not as ubiquitous. It's not as streamlined. I can access my Ethereum wallet from anywhere in the world because it piggybacks off the internet. But it's not seamless. It's not integrated into everything. I can't just go to a store and pay with my crypto, right? At this point in time. I still have to use a bank. I can't just use Ethereum as my banking layer for everything. Like there's some things I have to use a bank for. I can't pay my taxes using the Ethereum network. I have to go to fiat and then I have to transfer it using BPay, and which is like I don't know if other countries have that, but that's like a payments kind of like network in Australia. So I think that Ethereum is just going to replace all of that, and all that stuff will just be built on Ethereum instead, and it'll just be the settlement layer for everything in the world.
Yeah, I'm very much in agreement where we're just going to see global settlement layer, all transactions flowing down to Ethereum eventually, and a huge value proposition for it. And as well, like one of the good things about that is, everything will be stored on a decentralized, immutable base layer. It'll be a lot fairer than the, current Web 2 is and all that. So yeah, definitely something to be excited for. But anyway, that brings us towards the end of the video. So are there any closing remarks, closing things that you want to say?
Well, so first of all, thanks for having me. This has been a really fun discussion. I hope people kind of like got a bit of education out of this for sure. I think the last thing that maybe I wanted to say was, I guess we were just briefly talking about the markets. I think there's a lot of new people in the ecosystem right now who haven't experienced bear markets or sideways markets or losing money. And I think if you're in it for the right reasons, and the right reasons being in it for the tech, and you actually care about what's being built and you're a long-term investor, there's no use worrying about the short-term price movements, because if you said to yourself, well, I'm going to invest in ETH and it's going to be a 5-year investment, why are you worrying about what it does week to week? Like, were you going to sell this week? If you actually were going to stick to your 5-year investment plan, then you weren't going to sell. So it really doesn't matter. You should, technically you should be looking at these kind of things as a buying opportunity, right? If you've got a 5-year time horizon. So I think just getting into the mental model of not worrying about the day-to-day, week-to-week, or even month-to-month price movements, if you're a long 5+ year term investor, is the best position to be in. And I see too many people worrying about the day-to-day when they didn't even plan to sell, didn't plan to do anything. Like it's actually bizarre to me why you would even worry about it if you're not planning to sell for a very long time, and you want to see the Ethereum vision come to life. So I guess that's just my closing remark there.
Yeah, totally agree. And that brings us to the end of the episode. If you enjoyed the video, remember to like and subscribe to the channel. Follow me on Twitter, join the Discord, the links are down below in the description, and thanks for watching the video.